Hey guys, welcome back to my channel. Hope you guys are all doing really well. Now for today's video, as you can see, I've got a special guest here on my channel, Ravi.
Hey guys, how you going?
So Ravi is a buyer's agent and a mortgage broker here in Sydney. He runs his own company called SearchProperty. So the reason I have Ravi here on my channel is because he was my first go-to person when it came to purchasing my first investment property. So today we'll be chatting with Ravi. We'll go through, some tips, some tricks, advice, and really run you through what the property purchasing process is like here in Australia. And we'll also be answering your questions on Instagram, which you guys sent through on both of our channels.
Correct.
So I think I'll pass it over to you if you wanted to give maybe a little bit of an intro.
Yeah, of course. Hey guys, my name is Ravi and I'm the founder and buyer's agent at SearchProperty. Obviously, I helped Sanjana find her first investment property and now we're gearing up to help her find her second.
Yep.
And yeah, it's great to obviously be on the channel and go through a bit of insight into her journey and how we came together about trying to figure out what her goals were as well as the strategy and what property really fit into that.
Cool, alrighty, so I think let's just get started.
Yeah, let's do it.
Okay, so I thought it'd be fitting to just start off with maybe a rapid fire property jargon round, just so that
awesome.
our viewers, understand the terminology, because I know there's going to be a lot of property words thrown around as well. So in no particular order, I've got some words here which I wrote down, which I think a lot of people, because I didn't know this when I first started as well. So the first one that I've got is LMI. What is LMI?
Okay, so LMI is basically lender's mortgage insurance. So banks will normally give you an 80% loan against your value. So if your house is worth 500K, they'll give you 80% of that, which is 400,000, and the rest you would have to pay as a deposit. But it's not always possible for someone to have a 20% deposit. So if you've got anything less than 20%, you incur what's called a lender's mortgage insurance. And that's where you would basically have insurance against, you pay a fee, and that insures the lender from having to lose their money. In a nutshell, that's what that means.
Right, and it's different for obviously depending on the purchase, the property purchase amount.
Correct, and also the amount of deposit you have. So if you have something like 10% versus having 18%, the numbers will be very different.
Okay, cool,
yeah.
Thank you. Next one we've got is LVR.
LVR, so loan to value ratio. I think I sort of explained that, but realistically, when a bank is, giving you funding, they will look at what the value is of that property. So they'll have a valuer go out, and let's say it is $500,000. They will give you a portion of that as debt. So your loan to value ratio is just that. So on average, 80%, banks are happy to lend you. Anything above that, you incur an LMI.
Cool, yep, that makes sense. We've got P and I, so you usually see this P plus I.
Yeah, so
when it's written down.
Some people get really confused by P and I and interest only. So in a nutshell, interest only loans we're talking about is just the cost of borrowing, right? So if you were to go and say to the bank, I'm taking out a loan interest only, you're saying, hey bank, I'm happy to just pay your cost of borrowing and that's it. Which means if you borrowed 400,000 in the beginning of the term, loan term, so 5 years maybe, 5 years later, it would still be 400,000. Whereas if you do P and I, principal being the P, you are basically paying a portion towards the interest, but you're paying a portion towards the principal. So in 5 years time, 400 would be maybe 380.
Yeah, that's a good explanation.
Yeah.
That makes sense. Cool, next one is equity. I know I've mentioned this in my video as well previously, so do you want
to... So something for especially, new investors, it's not always possible to just have $200,000-300,000 lying around. So what you ideally want to have is equity built in the property. And that pretty much means that the value of your property is going up. And so if we go back to, the loan to value ratio, and banks are happy to give you 80%, if now your property that you bought at 500K has actually gone up to say 600K, that means you have some equity there. And that can essentially be refinanced or topped up, and you can take that out and use that as another deposit.
Yep. It's hard to use the word equity when you're sort of trying to explain what equity is and not use that in the same sentence. Yeah,
that's right. And I think this is probably a good chance for me to, drop my YouTube channel, SearchProperty TV. And if there are any concepts here that, you know, are foreign or we don't have enough time to go through, I do put up weekly videos, like 2 or 3 a week.
Yep.
So try and help with free education.
Yeah, definitely check it out, guys. It's pretty cool. Next one we've got is negative gearing. We've definitely all heard of this, you know, in the news or in articles. So
yeah, definitely. It's always been on the news.
Yeah.
And everyone thinks that negative gearing is the way to financial freedom, and it's actually not. What was used, say, 10 years ago as a strategy, people were like, oh, go negatively geared and then you can save against your tax. Without getting into too much detail, again, hop over to the other channel if you want the detailed version of this. But negative gearing is basically saying that the amount of income I make, being, you know, the rent, versus the expenses I incur as part of holding that investment, the expenses are higher than my income. That means it's negatively geared because you're putting more money from your pocket to hold that asset in the hope that it grows in value. Whereas the opposite of it is positively geared properties. And that's where I've been advocating a lot on my channel that, you know, that's the road to financial freedom, especially with loans being, you know, mortgage rates being so low, especially even with your properties. It means that you're fortunately not having to put any money from your pocket into holding that asset, right?
Yeah, which is a good thing.
It makes it easier to budget, right? You don't really want to be putting out $300-400 a week from your pocket to hold this investment, because when you're young, you want to travel, you want to live the lifestyle you want to live, and you also want to be smart with your money, so you don't want to just go and flush it down the toilet.
Okay, cool. Next one we've got, so 2 more. We've got serviceability.
Okay, so serviceability, I won't go into this in too much detail. Basically, the banks, the way they calculate how much they are willing to give you as a loan is based on your serviceability. And that's basically them going, can you service the loan as a client? And there's obviously calculators they use. There's a lot of intricate sort of moving pieces in that. So to explain that would be just impossible. But if someone says your servicing is crap or you can't service a greater loan, that's usually in reference to serviceability.
Yeah, okay. And lucky last one, settlement.
Settlement, usually the most manic day if you aren't prepared, but it's essentially where you have the vendor, you know, whoever's selling the property is literally giving their title of the property to you as the buyer. Now, most people will purchase with a loan, so that certificate of title, which says to the government, I own this property, goes to the bank because they obviously have an interest in the property. And so on settlement day, it's literally, you know, 100 years ago was very different. You'd manually have to do things, and
a lot of paperwork.
A lot of paperwork. And now obviously you've got electronic exchanges. So, you know, you do exchanging of settlements, paperwork all online. So it takes 15 minutes, but people usually lose their mind because they're so like, oh my God, it's settlement.
Okay, cool. Thank you for that. We are going to move on to our next segment called Setting the Record Straight. I've got a few statements here, so maybe if you could like shed some light on these statements and sort of give us your thoughts on what you think, if they're true or false.
Yeah, of course. Let's do it.
All right, so the first one we've got here is it true you need a 20% deposit to enter the property market?
False. You definitely don't need that. And unfortunately, we've been taught the wrong way growing up. It's always been that you need 20%, otherwise you can't get in. You can get in with as little as 5% nowadays for an owner-occupier property. And if you want an investment, 10% is plenty.
Yep. But then that also means you've got to pay for the
lender's mortgage insurance, so LMI. Yes. So if you don't know what that is, rewind this video and go check it out.
Cool. Okay. Next one we've got is it true that main city areas are better investments compared to regional areas?
So false. Basically, location is important, but so is asset class and, you know, the asset type. So people are just thinking that because we're in Sydney and we're close to, say, you know, Surrey Hills or something like that, or in a ring circle to a suburb, doesn't necessarily turn to capital growth. And the reason for that is you could be comparing a waterfront house compared to a little studio shitbox apartment that's facing another wall. That's not going to have the same capital growth. And when you compare that to, say, somewhere regionally, which is what I advocate, is you still have the foundations of property investing there as well. So when you're looking at what grows, what doesn't grow, it doesn't simply come down to, I've got it in the same suburb as you, yet my property is facing the wall and your one's waterfront. That doesn't mean you're gonna get the benefit of capital growth in that area. So false.
Right. False. And I know you've got a lot of videos on this on your channel as well, where you talk about
definitely.
these things. Yep. Cool, next one. Is debt bad? Because everyone's here trying to pay off their debt as quickly as possible.
It's insane. Like I think 99% of people that I see even online on like Facebook groups are all talking about, how do I get rid of debt? Why would you want to get rid of debt when it's the cheapest it's ever been and it's about to get cheaper?
That's if you know how to use it well.
Correct, that's right. Some people think, oh, well, that means I can go out and, because Ravi said he can go get a car loan and drive a fancy car around. That's unproductive debt, it's stupid. What you want to be doing is attaching productive debt with assets. Now, what happens over time is inflation will kick in, and it means that you can pay today's debt with tomorrow's inflated dollar. So to sort of summarize or simplify that, it basically means that if you purchased a property 20 years ago, you have parents talk about how, oh, I used to make like $2 a week and that's what we were earning, and properties were like say $15,000, $20,000. If you had taken a loan out at that point for $20,000, it would feel stupid right now. You could pay that off, next month. So that's what's going to happen moving forward. So if you know how to use debt, that's the only way you're going to become financially free in the long term. Okay, that's an interesting one. Yeah, if you know how to use it though. Yeah. Okay. Next one we've got here is it hard work trying to manage an investment property? No, it's not. So for me, if you guys don't know, I've got 12 investment properties and they're across 3 states. Now, a lot of people sort of get scared. They're like, how do you manage all that paperwork? Like, I've probably remembered my parents doing it, but it's very different now. And obviously for you, it's different as well, because I got you onto the same system that I've got, which is pretty much having your property manager do a good job. And so actually managing it, you would probably want to spend at least about half an hour a week, just going through, making sure everything's fine with the property. But once you've done your first 6 months, you've got a good tenant in there, your property manager knows how you like to, interact and communicate, whether that be, please do not call me, email me, or please, if something happens, call me. As soon as you find out that groove, you could probably be spending anywhere from about an hour in a month. I definitely don't spend any time at all, actually. My property manager's pretty good. They deal with everything. And and that's how it should be. Like if you picked a proper property, if you picked the one that had the good foundations and was checked off, then that'll definitely help in obviously dealing with that. Yeah. Okay, cool. Next one. A recession is a bad time to buy a property. Yeah, so currently we're in a recession and not sure where you guys are watching from, but I think most economies now are going through some sort of downturn, and it's actually a really good time to buy. So I think I've come on the channel and everyone's going, he's saying the exact opposite of what I've been taught. Fortunately, if you are the 1% that decides to go one way, the 99% are going one way, you will do really well. So when we're looking at a recession, we're looking at everyone sort of spending a lot less, the economy is contracting, it's slowing down, which is what's happening now. What will happen is the people that need to sell will have to sell now, right? So if they've over leveraged or their cash flow is tragic, the way I like to see it is it's a reset. So every 10 or so years, we have some sort of economic correction, and in that time, all the people that did the proper way of investing, all the people that run a proper business, they'll survive and they'll thrive during this time. Whereas if you're someone that thought you were an entrepreneur, or these fake people that came out on Instagram and say I can put entrepreneur in my caption or whatever, they're going to struggle. They don't know the fundamentals. But basically, you're going to have distressed sales if the economy actually goes down. Because the banks will go, look, you can't repay your mortgages, you don't have enough cash flow, or your tenants are leaving, and that's why it's a good time to buy. Wow, I bet a lot of you guys didn't see that coming. Again, if you guys want the in-depth context, you probably go head over to SearchProperty, but I think this is good. Yeah, okay,
Cool. Last one we've got. Is it true that it's better to put your money into a high-earning savings account instead of investing?
High interest savings maximizer savings account. I don't know what jargon they come up with now for marketing these amazing savings accounts these banks say. Now you can earn 1.3% or 1.5%.
Wow, that's a lot.
It's actually so crap. Like if you had $100,000, that would mean $1,000 a year by you sitting in a bank account, right?
Yeah.
When you put it into context like that, it's tragic. But $100,000 could actually buy you 2 or 3 investment properties. And when you're looking at investment properties that are positively cash flowed, you're pretty much making at least a 20 or 30% return every year, and that compounds. So what people don't understand is, well, debt's bad, so why am I going to buy an investment? So they go and leave it in a bank in one of these high savings interest maximizer accounts. And then they're earning nothing. And 5 years later, when inflation is eroding all that savings, they're going, hold up, I did everything that I was supposed to do. I was doing everything that they taught me at school. And unfortunately, you get left behind.
Yeah, I think that comes down to a lot of that, shifting your mentality from that old kind of approach to the new approach, right?
Yeah, that's exactly it.
I definitely know where I'll be putting my money.
Yeah.
In a savings account for sure. Okay, now thank you for that. I feel like we've busted a lot of myths.
Yeah, hopefully that helps.
Yeah. Cool, let's move on. So I thought it'd be a perfect time to just talk through the buying process, so what I went through specifically with you being my buyer's agent and how that entire process works. So I'm going to take you through, or well, Ravi's going to take you through the process that we went through for my first property and how I purchased that and what I needed. So there's 7 specific steps which I've noted down, which maybe we can talk through. So the first one is about making sure that you save enough money for a deposit. Now I saved for a 10% deposit because some jobs don't actually require you to save the full 20%, and my job was one of them, working at a bank, so I obviously had that exemption. So I only had to save 10%, which was amazing because that meant I could sort of enter the market a lot quicker and I didn't have to wait, till I saved an extra few $1,000s. To know how much you need to save for your first 10% deposit, I think if you want to answer this, how do you know how much you're meant to save?
Well, I think the biggest thing here is that most people will invest because they've been told it's a good idea. Their parents have gone, hey, you have a full-time job and you've got money coming in and you should invest. But the truth is you don't really have a strategy. So even when we started speaking about this, it was like, hey, I want to invest, but I've got no idea where and why I'm actually investing. So I think the first step is, yes, you're saving money. But I think along with that, you need to get your mindset right about why exactly you want to save that to invest. So in your case, we were fortunate because you work at a bank. So they had an exemption of LMI. So you didn't have to pay LMI, which is amazing. And a lot of other, if you're an accountant, you've got a CPA or CFA. If you're in medicine, if you're a doctor or if you're a lawyer, so you get a professional package, and that's where you don't have to pay LMI. But I guess to answer your question, how much is 10%? I like to think that if you're at $40,000, so Australian dollars, I think that's the perfect starting point. So if you're someone that's close to that or you expect to be there soon, then definitely give me a call if you need that help, all right?
I know with me, I saved up about $33,000 it was, and that took me about a year to save up. So just a ballpark figure in case you guys are curious. Alrighty, so the second step is the pre-approval step. Did you want to take us through this?
Yeah, so this is a very basic sort of step that we take. We need to get your finance in order. So that's at that point we go, okay, we've got the strategy in place. We know why we're doing this. We now want to know if you can actually borrow money from the bank because there might be sort of credit cards or debt that you have that you think no one's going to find out about, but it in fact affects how much you can borrow. So it affects your serviceability. So getting a pre-approval sort of just gets everything in order and lets you know that what ballpark figure you're looking at definitely is possible. Fortunately with us at SearchProperty, we do both the mortgage broking and the buyer's agency. So we're not going to advise on a strategy without actually knowing that your income can service those loans. So rather than having to go to 2 or 3 different places, you get all the answers from the one dude.
Which is really convenient. Okay, so then once we know that we've got our pre-approval, we have like this figure amount which we can potentially buy a property for, then it's a matter of just finding that property and yeah, which is what you helped me with.
Correct.
So I'm going to again, leave it to you to answer.
Yeah, look, I don't think it's everyone's cup of tea. Like you definitely don't like spending time on realestate.com.
It's definitely not something that I enjoy doing in my free time, searching up properties.
Whereas I'm the opposite. I like to stay on top of what's on the market, what's coming on the market. And so for us as buyer's agents, we have connections with agents. So they'll often send us properties that haven't gone online yet. And in our case, we love this stuff, right? We have a full research team. So they're looking at not just the property itself, but we're looking at what fundamentals are there. We're looking at why are these locations expected to grow? And what does this mean in line with your strategy? So you could pretty much be buying a property that doesn't fit your strategy, so it doesn't work for you, but it could actually work really well for me. So it depends on your strategy or goals. But the research part, yeah, it takes a long time. So if you're someone that wants to do it yourself, I pretty much told you, I was like, you need to spend at least 20 hours per property. And she said, I don't think I'm gonna do that.
I wouldn't even know what to look out for. Like those little things, just to make sure that you're picking the right property, I wouldn't know what to do. So that's why I sort of resorted to you.
Yeah, and to be honest, after, I mean, not trying to say this because I'm a buyer's agent, but after knowing what I know, I would not be buying a property without one, because when you look at spending $200,000-300,000 on an investment, it's worth spending a little bit to get a buyer's agent so that you know with confidence what you're 100%. Investing in.
It's because you're a professional in this field. It's like, I like to think of it like this. Like if I'm going to go get my teeth checked, I know you use this analogy as well. It's like if you're going to go get your teeth fixed, obviously you're going to go to a professional who knows what they're doing. I'm not going to fix my teeth myself. So yeah, I like leaving it up to the people that know how to do their job, and it just gives me that peace of mind as well.
Yeah, correct. I mean, it's similar to going, well, okay, I know how to, I don't know, fix my car because I've watched 3,000 hours on YouTube. You could just pay for that service, and it's a better use of your time so that you're actually working on, you know, lifestyle, you're working on being social, you're working on your 9-to-5 job, and then let people like us do what we need to do.
Exactly, 100% agree. And also with this point, I also want to touch on the negotiation. So how do you sort of, you know, how we obviously wouldn't negotiate, that's your job, right? To negotiate.
Yeah, again, this is, you know, it's not something that people are comfortable with. You know, if you're in analytics and you sit there behind a computer doing your 9-to-5 and that's where your skills are, you are now having to be forced into negotiating with a professional negotiator. A real estate agent does this day in, day out. And now you're going from having no skills to I'm going to go negotiate, and on a $400,000 investment, doesn't really make logical sense. So in your case, it's pretty much we discuss what sort of our buy zone is. You know, this is what we're looking at purchasing in, and then you sort of leave it to us and we try and work our magic to try and get you the best price, because you're our client at the end of the day and you're paying us for a service. My job is to get you the lowest price, and the real estate agent's job is they're getting paid by the vendor. So they get paid by, you know, a commission of how much they sell the property for. So I love the fact that, you know, when people go, oh, I don't need a buyer's agent, I've got a real estate agent. It's like, well, a real estate agent's paid by the vendor. So why are they looking out for you? They're trying to get themselves paid, and usually they'll get themselves... They don't
have the best interest, for your best interest in mind.
Yeah, correct. For us, it's we want to get you the best price because you're our client. We don't know who the guy is trying to sell the property.
That's very true, actually. A lot of people don't sort of...
They don't think about that. Yeah.
Okay, so once you've obviously gotten your pre-approval and you've found your house or the property that you want to purchase, it's on to the unconditional approval. So
with the pre-approval, it's conditional. So they'll say, look, you know, if the property comes back and it's, you know, in a particular location that we're happy with as a bank, it doesn't have certain things like easements or anything like that. We're happy with the valuation that comes back. Then we are happy to give you an unconditional loan. And that's pretty much going, we approve that we are going to give you a loan to go ahead and purchase this property. Usually different states have different rules. You know, I think you're going to touch on cooling off period. And that pretty much means that I can go buy something, put an offer, accept, and within 5 days or 10 days in that cooling off period, you can pretty much back out without having, you know, financial ramifications. So
I think you touched on that cooling off period. That was going to be my next point.
Oh, awesome. So yeah, in your cooling off period is pretty much where you need to do your due diligence. So for us as buyer's agents, or even as you doing it yourself, you can invest, you can research as much as you like, but you're not really going to know specifics until you get a professional building inspector, a professional pest inspection. And that's where you're going to uncover what's underneath the roof, what's, you know, what's happening in the walls. And during that cooling off period, you're able to get those checks done. And then obviously you get your unconditional during that time. So it's really a point where you go, I've secured the property, but it allows me that time to go and do those checks.
And how much is that time? I know it's usually 30 days, but can you extend that?
No, so it depends on different states.
Oh, so 10 days, sorry, it is.
Yeah, so different states have different rules.
Okay,
So in our case, we obviously would negotiate as part of the contract. We want to have a certain amount of days for settlement. We want a certain amount of days to get your finance in check. So we're always asking more than what's, you know, your baseline. So we're always trying to keep you mitigating that risk. And I know you're in risk, so you love that. So yeah, that's our job, and we try and help you.
Yep, cool, okay. And then obviously once the pest and building report comes back clean, then I feel like you're pretty much good to go and settle, right? Yeah,
that's it. There's a few other things in between, but they're very minor. And obviously if you want a conclusive like checklist of this, you can definitely just DM me or contact me down below, and I'm happy to send you through like the actual, you know, checklist that we use and give to clients. That breaks down every step of the way. But yeah, and then it's smooth sailing. You just pretty much have to wait. Get the banks will get their paperwork in order, and then you're ready to settle.
It's actually quite a simple process if you think about it and you actually go through it. I know before going through this process, I was really worried because I didn't know what to expect, right? And I felt like there was so many different steps along the way, and I was just really unsure. But then obviously speaking to a buyer's agent, they take care of all of that for you, and basically it's not a headache for you
because you were like, when people look at buying an investment and spending all that money, if they're doing it for the first time, generally it's a daunting task, right?
You're putting up so much money, like all that money you've saved, it's taken you so long, and you put it towards this thing which you don't even know anything about. You don't even know if it's going to work out or not. Okay, so that was the entire purchasing process, and let's just mention this is only for Australia. I know that there's a lot of viewers from different countries who watch my videos, so thank you. But if you are looking to purchase in Australia, then it may be, right?
And I think even if you're not from Australia, you're not looking to invest in Australia, I think it's just interesting to have these conversations, because generally what you find is a lot of people aren't even talking about finances. And so if you can start having more conversations about it, whether it's with your parents, whether it's with your friends, or whether it's, you know, watching videos like this, a lot of it's to do with mindset. Not just, oh, this is what applies to me because I live in this country. So it's just important to start opening up your perspective on these things.
Cool. Alrighty, so that brings that segment to a close. Next, what we're going to be doing is answering your questions that you all sent through on both of our Instagrams. So a little bit of a Q&A session here, in no particular order. First question is, personally, what sort of risk assessments would you conduct prior to purchasing your first property? I would say for me, the risk assessment, I actually didn't do anything. I left it completely to my buyer's agent. They found the property for me. They did all the assessments and checks and balances and everything like that. So,
But I guess for you, it was, you know, as an individual, even for anyone that's using our service, you've got to assess the risk for yourself in terms of how much can you actually afford. So when we were, you know, looking at purchasing, we were able to spend a little bit higher, but we wanted to have an emergency fund for you, right? So that's where you need to know your lifestyle. You're going to know it a lot better than I will. And so as part of that, you'll have emergency funds, and you'll, you know, have some money saved away for a rainy day.
I'm definitely not saying that whatever you've got, your entire life savings, put that towards an investment.
No, so you have to have that buffer in place just in case something goes wrong. But in terms of for a property specific that we're researching for, we're looking at an extensive due diligence list, right? So that's where we're looking at everything from how many more properties are being built in that area in the next 5 or 10 years. What businesses are coming in? What sort of government spending's coming in? What's in demand? What's not in demand? Then we're looking at migration, population, the age of that population. So it is very extensive.
It is very in-depth.
And I think when we do that research with the research team of analytics, I'm bringing that down to a very high level to have you understand it at more of a simplified version of that.
Basically dumb it down for us.
It's not dumbing it down. I guess it's more what's relevant to you.
Yeah.
Me talking about specific things about, this is what the roof's made out of. It may not be something that you're concerned by, but it also means that, you need to be aware of it.
Yeah.
And what most people will fall into is analysis paralysis. And that's where you've got too much information where you're sort of stuck going, I can do this, or I can do this, I can do this. And so you don't move anywhere. So for me, it's my job to go and filter down what's most important to get you the required properties and to reach your goals.
Okay, cool, thank you. Moving on to the next question. So, whether to purchase your first investment property or purchase your first home, what do you think the best?
Well, okay, what do you think is your best?
Well, look, purchasing my first home, I feel like I'm not at that stage of my life where I'm ready to buy a home yet.
Yeah.
So I feel like it's sort of a no-brainer for me to go towards that investment path because it's not practical, me moving into a house by myself. Like, it just doesn't make sense. I don't need that right now in my life, maybe some point later down the track, but I think investment is, I feel like for a lot of people, is like a good option.
Yeah, definitely. And I think it's also coming down to, if I can invest into a property that's worth $250,000, right? That's going to require a 10% deposit is $25,000.
That's true.
But if you're now looking at a property in, say, Sydney, you're looking at a 1-bedroom apartment for $500,000.
Yeah, very expensive.
You're saving $50,000 to buy a 1-bedroom unit. Now, you're really hoping that although after you move in, you're like, okay, I'm now gonna make it an investment so I can get all these grants. It actually works out that you're better off if you invest that money instead of trying to buy your own place and hoping that you made the right decision. Because unfortunately, when you're looking at a property for yourself, you're thinking emotionally.
Right.
I've got clients that have gone, oh, well, I like the kitchen in the area, like in that property.
In the area.
I've got clients where they're literally looking at a kitchen and they're falling in love with it, but it's not the best investment. Whereas when we're looking at an investment, we need to know about functionality and economics.
Yep.
We need to know, does the kitchen work? And why work, oven, range hood, taps working? And 2, numbers and cents. Is it making you money or is it costing you in order to hope that it's going to grow?
Yeah.
So investment first, definitely.
Yeah.
But this is not financial advice.
Yes, disclaimer will be at the bottom of the description box below. Okay, cool. Let's move on. So third question is now a good time to buy given the current circumstances? I feel like we've already touched on that already.
Yep.
And you said, yes, this is a good time to buy, even though we are in a little bit of a recession.
Yep. Well, I think when you're looking at investing, if you've done the proper research or you have a professional help you, today is the best day to invest. Because if you've done the right research, I've never heard anyone say, I regret buying 20 years ago. Never heard it,
yeah.
Right? All you would hear is, I wish I bought more 20 years ago. And some people are talking to me about how they bought one property during the GFC, and they're like, oh my God, everyone thought I was an idiot, but I wish I bought more. And so that's what's gonna happen in about the next 3 to 5 years, when people look back at the greatest time to be purchasing property, because they were too scared they didn't do anything. That's why it's good that you're getting into it.
Yes, yes. Starting early, even though I'm 25.
It's too early.
Okay, now number 4, does your HEX affect your serviceability?
Yes, it does affect you. For anyone that's not listening from Australia, that's pretty much your government supported higher education service. So they pay for your education, higher education, and then you pay it back as you make income. What will happen is when the banks are doing their serviceability checks, they will ask you if you pay HEX or you have HEX. They'll take a portion of your income out because you're having to pay a fee to pay down that HEX.
Yeah, yeah. So in short, yes.
Yes.
HECS does affect your serviceability.
Correct.
Okay. Number 5, what kind of property should you look to purchase? A house, a unit, a block of units? And what are the key attributes you consider when buying? I feel like we've already talked about that, but what sort of dwelling are we looking at?
Look, I think it all comes down to strategy. And, you know, some people may think, oh, this bloke's all he's talking about is strategy and goals. Essentially, if you don't have one, you're going to fail. I've seen many people that have come through and said, Ravi, help me. And they're in a position where they've got 2 properties that are duds, that's costing them money to hold and never grown. So if you don't have a strategy in place, you pretty much don't know what your next purchase will be. And people are thinking about, oh, what's my next purchase? We're thinking, what's your next 4 purchases? Because we want to get you to point B, being financially free, having more choice. If you still like your job, you can still work there. It's just having the choice of leaving if you wanted to, right? So in your case, I mean, we bought a 3-bedroom house. Your next purchase may not be a 3-bedroom house, depending on the numbers we're looking at, depending on location as well. In some areas, units actually grow faster than houses. Some people don't know that.
I didn't know that.
Yeah, so it really comes down to your strategy. Then we look at location, and then we look at what's working in that location.
Right. Okay, so basically just leave it to the experts.
Yeah, I guess so.
Okay, last question we've got here is, can a foreigner purchase property in Sydney or in Australia?
Yes, you can. And during the 2016 boom in Sydney, a lot of foreign investment, and that's basically what drove up prices to all-time highs, right? So yes, you can. You just have other taxes. Yeah, you pay extra for certain things. Again, if you are interested in this sort of stuff, it's very niche because a lot of the audience that's listening to this or is interested is from Australia. So if this is something that you are interested in, then probably just contact me directly. But it is possible. Yes. Anything is possible.
I'll leave all of Ravi's links in the description box below, his website, his contact channels and everything like that. So be sure to check it out. Okay, so that brings us to the end of the Q&A questions. I think just to wrap up, if you can sort of give us or give young investors out there maybe 3 tips, some advice on what they can do to kickstart their investment portfolio. 3 quick tips.
3 quick tips.
Yes.
I noticed how she said quick because the video is probably pretty long.
Yeah, you're talking too much.
I love this stuff, guys. Okay, so 3 quick tips. Number 1, having a strategy and goals. Look, I've got a bit of a framework that I work with. So if you want that, hit me up. It's basically an action plan, and it allows you in your mind to have on paper what you want to achieve, why you're investing, what does the investing mean for you in 10, 15, 20 years, for not only you, but your family and your parents. So I think strategy is number 1. Having that is paramount. Number 2 is get into the good savings habits. Guys, I see way too many people blowing money in their 20s, and I'm 28 now, but I know the amount of money I was trying to save back then, getting extra jobs, second jobs, third jobs, whatever it needed to be, and that compounds. So the earlier you can start, the more benefit you will get with compounding interest, okay? Now that's number 2, and number 3 is open your mind up to other things. What I mean by that is what you were taught at school or what someone told you, like some random uncle that said, oh, I invested here, you should invest there. And they invested like 10 years ago. They don't even know what's happening now. You need to now start listening to the people that have credibility, that have gone and done what you want to do. So in our case, it was very easy for you to make that decision because I purchased my first property at 22, right? So you purchased yours at 25, right? And so starting young, there's an art to it because what your advice you're going to get from a 45-year-old about investing your first property is that he doesn't have the same values as you, right? He doesn't know that you want to travel. You don't care about, loans and things like that. So you need someone that you can actually communicate well with, be open with. And I guess, keeping it quick, it means that you need to just keep an eye out for relevant information. And of course on my channel, I'm bringing out videos. I've got a shameless plug here, but it's really for you guys. It's not so that you can hit me up and use my service. It's that you guys can start getting educated, because if you're scared now and get educated for the next 6 to 12 months, you'll actually proactively act.
Yeah.
Whereas if you sort of go, no, I'm scared, so I'm not going to educate myself, in 6 or 12 months, you're too late.
Yeah. Cool.
My 3 tips.
Thank you so much for that. It was great having you here on my channel. I hope my audience, you guys found it helpful, informative. If you've got any questions, then definitely leave it down below. Ravi and I will be, happy to answer those questions for you. And yeah, that's essentially it. Did you have any last words?
Guys, thanks for watching all the way through, and she's not going to say it, so I will, but you should definitely subscribe down below. She's doing some amazing things. And if you are interested in more property content, then head over to SearchProperty TV. But thank you so much for watching all the way through, and thank you for having me on your channel.
No, all good. And yeah, that is the end of the video. Hope you guys really enjoyed it. If you did, then please give this video a thumbs up, and don't forget to subscribe to my channel down below. And I should see you guys in my next video. Thanks, guys.